Let's look at old crop contracts here. In December at 520.5, it's down 6.5. And Kansas City, or hard red, off 4.25, 506 3/4. Spring wheat, we trade this in Minneapolis. It's lower, and the cotton market is up 10 points on the March, 63.95. Oliver Sloup is with Blue Line Futures. Okay, Oliver, first off on the row crop side here, flash sale, is that something that's helping get us to where we think we need to be?
I mean, it's a step in the right direction, albeit it's probably a pretty darn small step, but it is a step. We need to obviously see more flash sales to China to really get this market excited. I do think the fact that just China's, willing to come back to the market is a good sign. And I do think if we do break lower, that China will step up and maybe increase their purchases. To what extent is going to be the huge question. But regardless, I think there's going to be a lot of opportunities going into the end of the year for traders on both sides of the markets. We've seen the daily ranges expand for the grains, which is great to see through much of the summer. It was kind of like watching paint dry. Beans, obviously, front and center focus here. The daily chart doesn't look terrible. The weekly chart is a little bit concerning. We've left some pretty big tails at the top end, which tells me that right now the market is rejecting higher prices from here. So again, like we've mentioned, we need to see China show up with some bigger purchases to keep that momentum going to the upside. As far as the technical levels to keep an eye on, the 20-day moving average is kind of right where we're pinned at this morning in that January contract. That's 11.25. Support, what we're calling is must-hold support, 11.12 to 11.16 below that. And we're back to that psychologically significant $11 handle. So the good news is great to see, but we need to see a lot more of it.
Yeah, absolutely. Okay, speaking of psychological, man, when we start talking about the livestock side of things, this has been a crazy few days for news. So we'll take a break, come back, and pick up the conversation as we talk cattle next with Oliver Sloup. This is Market Day Report. The only exception there as we went from 294.32 down to 294.17, and that was the locked limit lower. Oliver Sloup is with Blue Line Futures. And Oliver, I'm just wondering, can we pull something from these, even though they're tight ranges here at the very bottom, can we pull anything from that, maybe from the synthetics?
Yeah, I mean, obviously the open and lock limit lower is not a great sign. On Friday, we got the cattle on feed report, which was actually neutral to kind of friendly, and I painted neutral as more bullish than it probably should be. And shortly after that, obviously, we got the news of the Tyson plant shutting down, which is just really sad and terrible timing ahead of the holidays. And my heart just goes out to all those workers and the families and those affected in that whole town of Lexington. As far as the markets go, looking at the synthetics, as you had mentioned, the options are still trading. So the options are trading as if the futures would still be trading. And the synthetics really aren't pricing in the panic that you would think. It's very wide between the bid and offers in the synthetics, but $2 to $3 in some of these live cattle contracts isn't the panic that you would think just by talking to people within the industry. And that's certainly a lot different than what we've seen when we've been lock limit lower over the past couple of months. You saw a lot more panic. Now, obviously, being 15 to 20% off of the recent highs probably has something to do with that. A lot of air has already been let out of the balloon. How much more downside is the big question. A lot of times these environments like this, it becomes very emotional, and that creates very irrational trading. So I wouldn't be surprised to see us overshoot fair value before finding our footing again. But longer term, again, you look out to some of those back months that are trading, I think that's telling you there is some value out there.
Okay, so let's work this back into the fact that we've got the top four who have 85% of the capacity, but really our plant utilization up to this point's only been about 80%. There's some that believe we could be closer to 90%. Where's the pressure now in the market? Is it on the cow-calf side, or is it really starting to squeeze those feeders?
I think it's a little bit of both. And the positioning and the headline risk has been weighing over this market, basically the whole run up, even during the bull run up. And it's kind of one of those things where you start to see things unwind. It escalates very, very quickly. Pressure, I think, probably to continue. The feeder cattle still, I'm a little bit concerned about going forward with that looming headline risk of the southern border reopening. Not to say that it will, but that risk is certainly still there. And talking with some guys in the industry, some think that it's a matter of when, not if. So again, those are additional risks that linger over this market, and I think ultimately keep some of those hedge fund managers on the sidelines, which is really what we've been talking about with you guys over the last month and a half since the administration came out with their stance to try to lower beef prices for the consumer. They're going to take a lot of steps necessary. The lingering, proverbial shoe to drop is still that South American border. Whether or not they open it or not, to be determined. Time will tell, I guess.
Okay, and I guess the final one here is, with this happening, we're not seeing a lot of change immediately, but are we starting to price in the fact that this is negative really for those other sectors in the industry as we move forward? Is that really what we're starting to price in as well?
I think that's part of it, what we're seeing. And like I said, a lot of times when you get these sharp, emotional, irrational moves, they overshoot fair value. Zooming out, looking at the cattle complex, the cattle on feed report, like I said, was neutral to bullish. The herd is still very small, so there is still a fundamental reason to be halfway optimistic in this market, but we're in an irrational and emotional trading environment, and sometimes you overshoot fair value. So it might take a couple weeks for the dust to settle here, but I think eventually it will settle out and we can get back to normal trading and trading the fundamentals behind this market. The other kind of odd thing this week is the fact that it's a holiday week. So we're closed on Thursday and an abbreviated session on Friday. Potentially some traders hit the exits early this week.
And final question, what's at the center of the Thanksgiving dinner table for you?
Prime rib, of course.
There you go. Oliver Sloup, Blue Line Futures. And that's